I think if you look at the data per se, there's been a huge price increase. I mean, if you look at blue carbon prices from where they're at from 2023 to now, I think it's about a 250% price increase, right? So if you're looking at it as an activity type, there's a very clear price signal for it. But what part of that is also because there's not much supply. I mean, there are less than, or rather around 10 projects that are currently or have issued blue carbon credit so far. And there's nowhere near the amount of projects that are needed to meet that demand. And that's reflective in the huge increase in price recently. Partly related to what we quickly found out as we embarked on the Canopy program, which is that mangrove restoration, which is by far the biggest activity type when we talk about blue carbon projects, are notoriously famous or infamous for failing. In fact, more than half of all projects fail to issue credits.
Welcome back to This Week in Carbon. I'm your host, Eddie Smith, and today's guest has a career that spans both sides of the carbon market, the policy rooms where the rules get written and the conversations organizations have to make those rules work on the ground. Today we have Rueban Manokara, the global lead for carbon finance and markets at WWF. Rueban, thank you so much for joining me today.
Thanks so much, Eddie, for having me on this podcast.
Yeah, of course. So I think to start off, I would love to introduce you to our audience. You obviously have a wealth of experience in carbon finance. You spent years inside Singapore's government, negotiating Article 6 policy, and then transitioned to an NGO like WWF. So what made you kind of conduct that transition, and how did your view of the carbon markets maybe shift when you crossed that side?
Thanks, Eddie, and thanks for that refresh of my career. And you're absolutely right. So I started my career and spent a long time in government, in particular in policy making. The last stint of which was to help develop Singapore's carbon market policy, as well as to front related negotiations, which are Article 6 at the UNFCCC and at COPs yearly. And it was a hugely exciting piece of work. Singapore being a small country, but a country that tries to be helpful in international negotiations, it really helped me to understand the different perspectives globally that countries have on carbon markets. What are their priorities? What works for them? What is the underlying rationale? And it also helped that Singapore was a facilitator at the ministerial level for Article 6 for a number of years, where I was leading the Article 6 negotiations process on behalf of Singapore. So that was helpful also to gain a more in-depth view of what the different priorities are for nations. And that also, there's many sleepless nights and late nights at the COP also helped me to gain a deeper understanding of the rules of Article 6 and the rules of international carbon markets. And to some extent, by extension of that, my role in the International Civil Aviation Organization, ICAO's CORSIA mechanism, where I was a technical advisory body, helped me to understand better the rules that were being set within that body, of which there are multiple synergies between the Article 6 rules and the ones that are under the ICAO CORSIA mechanism. I think this global perspective in both roles led me then, and I was very fortunate that an opportunity had come about in WWF to essentially set up this office, which was the inaugural carbon finance and markets office that's mandate is really to coordinate among the WWF networks. Globally, we're about a network of 100 offices, of which I think now there are about 25 different carbon markets programs that WWF does across the globe. So as a network, there was a need to coordinate across these, but also where there are flagship initiatives, and can share about some of those later, to take a more direct role in designing and leading them. So I think it was really this prospect of continuing the work that I had been doing in the Singapore government in terms of building that global consensus and contributing to the global agenda, but in a slightly different frame and with an NGO this time. But I think at its core and its thesis, the genesis of what we're trying to achieve is similar in terms of achieving high integrity impact. So that has it's been a relatively smooth transition, I would say, and very thankful for both my previous experience and the current opportunity.
Awesome. Yeah. Thanks for sharing your background. And we've got a lot of topics to dive into throughout this episode and in a lot of different areas. But I think for the first segment, it would be great to talk about WWF's philosophy on carbon finance, right? I know WWF's position is deliberate and uh, sometimes it can be counterintuitive for an audience used to maximizing carbon credit advocacy, right? Because real economy transformation must come first. So I'd love maybe for you to start with talking about the views WWF has on carbon finance, and on the position that real economy transformation comes first, and carbon finance supports, not replaces that transformation.
Yeah. Um, Thanks, Eddie, and I'm happy to elaborate on that. I think the fundamental opposition comes from this understanding that there are multiple tools available for corporates or even governments to decarbonize, of which carbon markets is one of them. Then it becomes a question of where can carbon markets play a meaningful role or the most effective or efficient role as part of that sort of toolkit of decarbonization financing tools that are available. And by underlying that thesis is WWF's position, which is that value chains and transforming value chains into low carbon value chains must be the essence of it. It means that if you're a corporate, you focus on your scope 1 to 3 emissions. And through that, you not only decarbonize your supply chains, but you increase your resilience and increase the business opportunities that a corporate might have as they are transiting through that low carbon journey as well. But at the same time, WWF recognizes that as corporates go through this journey, there will be buckets of emissions that are still that corporates can address. I mean, the first bucket is of course the ongoing emissions. It's unrealistic to expect corporates to go from BAU to net zero overnight. So as they are transiting to a journey, there's a bucket of ongoing emissions that could be addressed because let's be frank, globally we have emitted far too much already, and that's quite evident in the temperature readings that we have now. And the second bucket of emissions are residual emissions, which are no matter how hard the corporates try. I mean, to put it simply, these are emissions that they cannot reduce or remove. And this is where carbon credits could play a meaningful role. So using investments to go beyond the targets and address ongoing emissions, but also investing in high quality removals, right? To really remove the residual emissions that otherwise can't be addressed as corporates go through that journey. So I think this is the fundamental philosophy that WWF has, which is to not distract away from value chain discussion, from value chain decarbonization, but also to recognize that there are still emissions that need to be addressed as corporates go through the journey. And that's where carbon credits and carbon finance can play a meaningful role in complementing that existing toolkit of in-value chain decarbonization.
Yeah. 100%. I mean, I feel oftentimes people forget that it's net zero, not real zero, right? So you still need to mitigate and offset those residual emissions that will still be there until we replace our energy sources with fully zero carbon energy, which probably won't happen for a good amount of time. But these viewpoints that BWF has helped shaped large standards, corporate standard setters, and quasi regulatory bodies like the SBTI, the Science Based Targets Initiative, the TNFD, and they've also helped shape gold standards. So three of the most influential standards in climate and nature finance. I think as a question for that, where do you think that the standards ecosystem is working well right now? And where is it maybe creating confusion or contradiction for buyers and project developers, right? Because it seems that the ecosystem within carbon markets is fragmented, right? And there needs to be more interoperability. And standards play a big role in that, right? So I'd love to hear your thoughts on this.
Yeah. Thanks, Eddie. And you're absolutely right in the role of standards and the role of WWF as well. Maybe I can take a step back and sort of explain how WWF views the sustainable finance world. Because in essence, we're talking about financing, right? And we WWF sees it in two main buckets. The first bucket is what we call greening the finance, and that in essence is working to set standards, frameworks, taxonomies, so that financial systems or financial standards are recognized, for example, among other things, such as through the TNFD, the value of nature or the value of decarbonization. And then the second lens to which we look at sustainable finance is on greening the finance. And this is like, how do you then mobilize finance towards nature, for example, or other decarbonization solutions, or even carbon markets related projects, right? But we can cover the second bucket maybe slightly later on. But to focus on the first bucket, which is on greening the finance, you're absolutely right. So WWF recognizes as an organization our strengths, which is traditionally has been to work very closely with corporates and to work very closely with governments to set the standard that would lead or that would allow corporates and governments to go on that journey towards decarbonization and a net zero world. So as you've rightly pointed out, WWF played a foundational role as a founding member of a number of carbon standards, SBTI, gold standards, an example. We continue to sit on the boards of those organizations, and including us some on the demand side, such as the BCMI as well. And I think part of the reason for that is the fundamental belief that standards play a multiplier role in terms of the effect that they can have. And you've absolutely pointed out, I mean, in the absence of standards, what you would have is a fragmented marketplace of even on the supply or the demand side, a fragmented marketplace of what is considered to be high quality, what is considered to be a good use of carbon finance, and to so-called not distract real action through discourses as such. Standards play a role in setting the benchmark and setting the water level of what is high integrity, right? And I think the related point is also that standards are not single point. Like science, standards continue to evolve. An example of standards evolving is what we're seeing now. I mean, as SBTI is continuing to grow, and I think they just crossed the 10,000 companies mark in terms of companies that are now part of SBTI. But even as they grow, they are revising their standards, recognizing the practicalities, the realities, the evolving science. And that's where WWF continues to play a role as well, to not only help set the standards together with partner organizations, but to also help the standards evolve by being a feedback loop of to what is practical, what is realistic, or what is more aligned with the latest science as well. I think that aspect is important of continually evolving to be both science-based but also practical and realistic.
Yeah, 100%. I completely agree. And it's what the market is demanding, right? Is that the kind of standards are evolving to speed things up and scale these solutions in areas where those bottlenecks do exist. But thank you for talking about kind of WWF's viewpoints. I want to shift gears here and look at more of the bigger picture, right? And maybe talk about Article 6 and voluntary and compliance convergence. But so shifting gears to Article 6, right? You negotiate Article 6 from the government side. The framework is largely agreed. And there are some transactions starting to be structured and actually move. Do you think that the mechanism actually does what it's designed to do? Or there's still kind of maybe some gaps in the Article 6 implementation rules that exist. What's your thoughts overall on this? And I bet you have maybe some hard feelings or some feelings about this current situation we find ourselves in geopolitically with the U.S. kind of pulling out of the Paris Agreement, one of the bigger funders of the Article 6 research.
Yep. Thanks, Eddie. So I think, as you said, taking a step back, the Article 6 and the Article 6 rules, in my perspective, are a huge step in the right direction. It's quite clear that, I mean, if we look at the Paris Agreement, and how it evolved from the Kyoto protocol, and similarly what happened with the CDM, countries continue to recognize the role of carbon markets, right? And I think that is a valid recognition, and we covered a bit of that in terms of why carbon markets are important as a tool in the toolkit, not only for corporates but also for governments to meet their IDCs, right? So that's the first reason why it is a step in the right direction, because it exists. And the second part is there was in building the rules and throughout the onset where the rule book was being negotiated, right? So I was in the negotiation since COP26, which was when Article 6 was first agreed upon, and all the way till the rule book was finalized. And throughout that, there was a recognition that countries and states and parties to the Paris agreements are coming together to build something better. And that's why we've seen stronger rules in Article 6 and stronger mechanisms and stronger safeguards. An example is the requirement to do sustainable development. An example is the introduction of the overall mitigation of global emissions as well. An example is mandatory adaptation contributions, for example. So these are huge steps in the right direction to improve on what had been built so far. So it is a step in the right direction uh, on both fronts, right? On having a mechanism, but also building on past experience.
Yeah.
And to also elaborate on the aspect of Article 6 is that it is hugely encouraging that it is operational now. And we have the both mechanisms of Article 6, both market mechanisms of Article 6 being fully operational. We have now credits issued under the PACM, under the 6.4 mechanism, but also transactions already happening in 6.2. Using Singapore as an example, there was a purchase of over 70 million worth of credits, right? Or forward purchase of 6.2 credits that was made by the Singapore government. There was a year before that, actually, a transaction between Switzerland and Thailand, among other transactions. So I think it's hugely encouraging that both market mechanisms have become operational in in a UN sense in a relatively short time since the real book was finalized.
Yeah, definitely. It's very encouraging. And I think one of the countries that, as you mentioned, that has taken a lead in this area has been Singapore, right? They've been signing bilateral agreements aggressively across Latin America and other continents. But do you think that the pace of deal making that the Singaporean government has made reflects their genuine climate ambition, or is it more geared towards a compliance carbon supply chain, right? And kind of the economics about transition, future transition risk when those kind of scope 3 regulatory schemes maybe come into place, right? What do you think is driving Singapore's aggressive Article 6 agreements, right?
Yeah, so I can't speak on behalf of the Singapore government, but I'll just share my thoughts on this. And I think the first is a recognition of what the rules are. And generally, when people talk about Article 6, they kind of zoom into Article 6.2 and then Article 6.4 as mechanisms. But they often forget Article 6.1, which states very clearly that the use of, to paraphrase and to simplify that article, it's the use of Article 6 is to promote greater ambition. So it's to allow countries to go above and beyond what they would otherwise be able to do using purely domestic mitigation. And that's where international cooperation, which is the essence of Article 6, is aimed to do. And I think Singapore has always been a rules-based or a huge supporter of a rules-based system. And with that in mind, the philosophy seems to be that you have action taken that would allow more ambitious climate action. So I think there was a logical flow of sequence, right? You see Singapore playing an active role in Article 6, but also before the actual transactions coming, releasing, I think Singapore was one of the first countries to release their new NDC, which was more ambitious than its previous NDC. And then you sort of saw the transactions and the purchases that would sort of allow Singapore to meet its target. But granted, these are towards the 2030 NDC and not 2035 NDC. But it's still, there's a clear sequencing where the step was to take more ambitious climate action and then participation in the carbon markets to to meet those targets that have been set.
Yeah, yeah, well said. So I think transitioning here to kind of the maybe structural gaps that remain within the voluntary carbon market, right? From my understanding, of WWF's carbon finance program is that it's explicitly framed around addressing these structural gaps in climate finance, policy, and on the ground implementation. And and these aren't just market inefficiencies, right? These are the reasons, the overarching macro reasons that capital that is ready to move isn't reaching the projects that need it the most. Right? And this is especially the case in Southeast Asia. Roughly 25% of global nature-based solution projects potentially sit. Yet climate finance deployment remains disproportionately low in the region. Now, I want to talk about this gap between capital committed to nature and capital that actually reaches projects on the ground. It's quite large. So, from your day to day experience, what are some of maybe what are these bottlenecks that prevent that capital from smoothly flowing to projects on the ground?
Thanks, Eddie. And maybe I can answer that question because it broadly mirrors the areas of work that WWF does in the carbon markets, right? So there are three areas where WWF primarily works in carbon markets and this work was structured on the basis of WWF's understanding of where the gaps are or where the critical gaps are in the carbon market and where WWF can play a meaningful role. I mean, granted, WWF is an NGO and there are roles we play and we can't address all gaps, but at least we found three gaps that WWF can play a meaningful role in. The first is to channel finance into underserved areas of the market. You're absolutely right. There are areas of the market that are currently relatively better served by carbon finance, but there are areas, for example, in the nature restoration space, in the blue carbon space, that are currently quite underserved, especially in some regions, like in Asia Pacific and specifically in Southeast Asia as well. And that's why, for example, WWF has come together to build a canopy program, which focuses on change finance to blue carbon, of which there are very few projects that are issuing credits, and there are structural issues with financing that the platform aims to address. The second gap that WWF structures its work around to address, which is in the policy support and technical development space. And this is really with the view of what you said, Eddie, how to channel more finance to action on the ground. And for one part, we see technology playing a role in that, where you have effective technology deployment. What you have is a greater success rate of projects, and then you would have more finance that flows into the projects because the projects are inherently more credible and more investment ready per se. But in order to also make that happen, you need the policy enablers, the regulatory environment to do that. So WWF spends a lot of work with governments, with regulators to ensure that, or to help support them in structuring regulations and policies to ensure that that flow of finance can happen. And the third gap that WWF works on is implementation support. And it's my own view that we've made huge strides in improving the science, but also the methodologies of carbon projects. I mean, it's quite evident in how we've seen newer methodologies come up. I mean, Vera just released a number of new methodologies, including on soil organic carbon, including on improving the issuing the VM48, VM27, etc. But with that, and that's all great, and that's good. But that needs to follow through to implementation to ensure that those standards and methodologies are being adhered to, but it's not just a watchdog function, right? It's about supporting the implementers on the ground to make sure they have the capacity to deliver according to what the standards require. If not, you would have everything that looks great on paper, but either not many implementers able to execute it or are actually executing it, right? So I think that's a third role that WWF plays in terms of being that impact partner, providing capacity building support to project developers and implementers on the ground, or in many cases, like what we do in Mexico, with local communities directly to ensure that they have the capacity to meet these new and improved standards.
I actually didn't know that WWF kind of helped support and refine these newer methodologies like VM 47, VM 48. So that's quite interesting. I mean, is this
Yeah. No, so clarification. So WWF, of course, we stay out of the process of methodology development, and we had, as far as I know, no hand to play in VM 47 or VM 48. But there are aspects of methodology development that WWF takes a more involved role is. I think an example would be standards and methodologies developed in the UNFCCC through the PACM. So last year, for example, there was a lot of discussion around the removal standards under the Paris Agreement crediting mechanism. And there was a real risk that the standard was going down the direction of being developed to, in effect, exclude nature-based solutions because of some of the standards it was using, etc. So WWF had a few submissions to UNFCCC together with, or rather alongside, other international NGOs to highlight the risk that the standard was going down. And he was quite encouraging that at COP, when it's culminated, or just before COP, there was a recognition that, that standard needs to be reviewed to ensure that it is practical, that it is implementable, and remains open to all activity types. So I think this is an example of the role that WWF plays more upstream in terms of helping to shape standards in areas that are important from WWF's perspective.
yeah. Yeah. Uh, yeah. Thank you for clarifying. And I think, an area that correlates to this and something that I wanted to bring up is Canopy, right? The nature finance for Southeast Asia, right? And Canopy was launched this past February, right? Only a few weeks ago, right? I would love maybe to talk about this for the audience that maybe is unfamiliar. um, they walk us, through the origin of the idea and what kind of gap it's trying to fill. It seems really interesting. It's designed to be Corsia, ICVCM, and Article 6 aligned from the start, if I'm correct, right?
Thanks, thanks, Eddie, for the question. Happy to share about Canopy. It's one of the newest initiatives in the WWF network when you talk about carbon financing per se. And it was, as you rightly pointed out, launched in February this year. So it's slightly over a month now since it was launched. And the genesis of it was really science and understanding the gaps. And it really started out of a 2-year study done by WWF and our partners to study blue forest ecosystems globally. So WWF studied what we call blue forest ecosystems, which are mangroves, seagrass, salt marshes, and kelp globally, to look at where the challenges and the opportunities are with these ecosystems. And one of the key outputs of that study was that one of the greatest opportunities in the near term was to be found in mangrove restoration in Southeast Asia. So really that was the fundamental basis in Canopy being designed to how can we then design a financing facility to fully reap this opportunity and to ensure that we can catalyze and unlock this because it has a multiplier effect, global decarbonization and fighting climate change. I mean, it's very well known, for example, that mangroves store up to 4 times more carbon than terrestrial tropical forests. But it's perhaps less well known that mangroves not only do that, but they also sequester. The rate of sequestration of carbon is much faster as well. So it has that multiplier effect that if we was going to focus on an area, where can we make the most impact? And that's why we narrowed down on mangroves in Southeast Asia and then developed Canopy to do that. What was also very clear from the onset is that Canopy would not be a WWF mechanism per se. The fundamental thesis of Canopy is to work with other NGOs, other finance practices, existing carbon funds that are out there, and to work with them to help them channel their finances or channel the implementation support to blue carbon projects. So an example of that is Canopy was structured to be an initiative under the SEEN Coalition. And the SEEN Coalition is a coalition of 9 international NGOs that are committed to promoting nature-based solutions in Southeast Asia. So the large international NGOs you can think of, your likes of Conservation International, the Nature Conservancy, WRI, WCS, they are all part of the SEEN Coalition, but all committed to the same goal of promoting nature-based solutions in Southeast Asia. And Canopy was designed with that in mind, so that any one of these organizations, since there's a collective mandate and purpose to do so, can participate in Canopy, and it is organization agnostic from that sense. But it also looks to attract commercial capital that already exists, right? So WWF is working with existing fund managers for Canopy to provide that return-seeking capital, complement the technical assistance capital that WWF and its other partners are bringing in. So I think this is a fundamental philosophy that WWF has, which is a spirit of collaboration. And Canopy is a reflection of that in terms of how it's being designed, but also to circle back to the first point of not just designing for the sake of designing, but designing to be very clear of what the gap, the platform or the mechanism in this case is trying to understand. So maybe just a last point on Canopy. So Canopy aims to restore 12,000 hectares of mangroves, which for Southeast Asia, given the geography, it's a sizable amount. And through that, generate high quality carbon credits that are aligned with uh, or that use CORSIA eligible methodology. So it uses PM33 methodologies, for example, and current pilot sites are currently being identified in Indonesia and the Philippines, but technically it could deploy finance into any country within Southeast Asia that has a potential for mangrove restoration.
Yeah. Thank you for sharing. Sounds like a great initiative. And one common trend that I'm hearing is talking about kind of blue carbon and mangrove restoration in Southeast Asia. I mean, this is a very large area of impact for Singapore, for other Southeast Asian countries, but in particular, with regards to the voluntary markets, blue carbon credits, high quality blue carbon credits remain scarce, right? I mean, there's very limited supply of high quality blue carbon credits in the spot market available today at a sort of low cost, right? That availability just isn't there. And a lot of the investment that's going into these blue carbon projects are being structured on the forward basis. In particular sectors that show demand for blue carbon would be like shipping, for example. Are there anything you're seeing with regards to blue carbon and market dynamics on the demand side? I mean, I know we talked about a bit of your work in WWF's perspective on the supply side, but how much do you engage with the buy side and corporates and investors actually seeking to uh, either be an end user of these credits or treat the projects as an investable asset class, right? Is this also a large part of your engagement?
Yeah. Um, Thanks, Eddie. I think that there are few parts to that question. So I'll take the first bit in um, what are my observations with regards to blue carbon credits from both the supply and the demand side first, right? I think if you look at the data per se, there's been a huge price increase. I mean, if you look at blue carbon prices from where they're at from 2023 to now, I think it's about a
Mhm.
250% price increase, right? So if you're looking at it as an activity type, there's a very clear price signal for it. But what part of that is also because there's not much supply. I mean, there are less than or rather around 10 projects that are currently or have issued blue carbon credit so far, and there's nowhere near the amount of projects that are needed to meet that demand, and that's reflective in the huge increase in price recently. Partly related to what we quickly found out as we embarked on the Canopy program, which is that mangrove restoration, which is by far the biggest activity type when we talk about blue carbon projects, are notoriously um, famous or infamous for failing. In fact, more than
Mhm.
half of all projects fail to issue credits. And that's partly because while, it has typically a lot of community benefits, biodiversity benefits, etc. It is very hard to implement. I mean, the traditional methods of having people on the ground, wading through mud, fixing hydrological conditions, and replanting that way, it's highly labor intensive and it's very hard to do successfully. So that's why, in from WWF perspective, we had created the Blue Carbon Support Program, which brings technology to the development process, which tries to make the process more efficient and effective. And in some of the sites, in some of the early sites, we've seen huge improvements in success rate. I mean, there are sites that we have implemented uh, uh, enhanced technologies, where the success rate is about 89%. It's a huge increase from the 50% that you see, and that the hope is then that that translates into an investable project, because no investor is going to invest in a project or a basket of projects if half of all that's in the basket is probably going to fail. So collectively, as an implementation ecosystem, the success rate of such projects need to increase, and that's a role that WWF currently provides through capacity building programs, through technology transfer programs, to improve the success rate of those projects as well.
Yeah, you highlighted a key aspect of the blue carbon market, right? I think traditional blue carbon MRV is very expensive and slow, and spatially limited. And then the specific technologies, satellite imagery, LiDAR, to eDNA, to digital sensors, they seem to be promising for the changing of the economics of verification, which are still a bit too immature to underpin verified credits at sort of institutional scale. But we've covered a number of topics here. I think I want to end on more of a forward-looking note. So I want to get your outlook on the markets overall. We're seeing about 80 carbon pricing systems are in place today across emissions trading systems and carbon taxes. About 60-40, 50-50 split amongst those two instruments, covering around 1/4 of greenhouse gas emissions. That's from a compliance perspective. And we're increasingly seeing voluntary markets and crediting mechanisms play a role within these compliance systems, like within the EU, within Colombia, in Singapore, and other places. So looking into the future, I mean, what do you hope to see in the next 5-10 years for the carbon markets?
Thanks, Eddie. And I covered this briefly in my earlier replies, or in our earlier conversation, rather, that we've seen huge improvements on the supply side, partly due to the work done by Meta Standards, done by CORSIA, by ICBCM, in terms of improvements in methodologies, improvements in standards. And my hope, as you said it, is that that continues to happen. We've made huge improvements, but we're not where we should be yet, because improvements are an incremental process, but we are on the right path, and I hope that trajectory continues. Also with the new mechanisms that we have seen, such as the Paris Agreement crediting mechanism. So that's my hope, but I'm quietly optimistic on that front because it seems to be on a good trajectory. Um, and on the demand side, and in particular, since the highs of, well, the mini high of post 2021 or so, we've seen the market relatively stagnate. And by the market, I mean the voluntary carbon market. I mean, we have seen leadership by some companies, mostly led by the US tech companies, in terms of providing strong demand signals for high quality credits, for example. But beyond that, the demand has been stagnating in the voluntary carbon market. But if you look alongside at what we're seeing in the compliance market, especially in Asia Pacific, where you have very clear demand signals coming out from Singapore, from Korea, from Japan. I mean, if you look at Europe, from Switzerland as well, coming through, then that provides a stronger demand signal of where the market seems to be going towards. And what we're also not speaking about is demand from CORSIA, right? Which has a 2027 sort of time frame through which airlines have to purchase. I think the thing about these compliance markets is that there is a compliance period, right? So there's some flexibility in terms of timing for where these governments or corporates that are supporting this government can purchase credit. So it seems to be moving towards a wait and see approach to where the market would be, but we're coming closer and closer to whether it's the end of the current CORSIA compliance period, which is 2027, and that's slightly over a year away, or the end of the NDC compliance period, which is the 2030 period, where countries would have to purchase to Article 6 aligned credits by, in order to, if they want to use them towards their 2030 NDC. So potentially we've seen this unrealized demand from the compliance market, But we are reaching closer and closer to the end of the compliance period where that demand can be realized.
Yeah. Yeah, really well said. I mean, we could talk about Corsia for the next hour if you'd like to. There are a lot of things to discuss there. It's a conversation that a lot of firms within the market are having recently, right? From the number of risks that arising. Also, we're seeing deals get done from airlines recently, so it's a hopeful, a good sign. But really well articulated. And Ruben, thank you so much for joining me. This has been a genuinely valuable conversation, and you've given us a lot of insights into your work, the WWF, and the overall carbon markets macro landscape. So this is a perspective that you have that very few people can offer. So thank you for joining me on This Week in Carbon, and thank you to our audience for tuning in. Catch you next week.